And moving into the top 5, we're kicking off our segment this week with a digital bond launched by the European Investment Bank. Now, the European Investment Bank is actually the venture and development arm of the European Union. And the European Investment Bank has launched a $100 million tokenized bond offering on the Ethereum blockchain. Following in the footsteps of some of the other national banks that have launched similar products, the European Investment Bank is going to be working with Goldman Sachs as well as Banco Santander and Societe Generale, who also pioneered this operation. And they're going to be launching a $100 million European bond or Euro bond focused on the Ethereum blockchain. And so this is fascinating, not only because of the size of this bond, as well as following in the footsteps working with major players, but it has been rated AAA by Fitch as well as Moody's. So this is a highly rated bond using blockchain technology. This is a great step in the right direction.
Huge. This is why it's #1. This was done on the Ethereum blockchain, so it was a rated bond on a public blockchain by private institutions as well as a government agency getting involved. And there was a central bank, the Banque de France, who actually used their own CBDC technology to help settle this transaction. So this is major news. You also have, as you said, Societe Generale's Forge arm, which is their specific arm dedicated to security tokens, bringing this transaction to life. So that's a major use case, and that's proof in the pudding that security tokens are here to stay.
This is absolutely fantastic. And I have an interesting quote here from the VP of the European Investment Bank, that is Marino Felix. And he said, quote, "Digital bonds give the bank a quicker and more streamlined access to alternative sources of finance for projects around the globe," which is exactly the gospel of security tokens we've been preaching for years. You love to see that everybody's on board with that vision and that we're building a connected international global financial system for everyone.
Absolutely, and that lets us get into #2, which is a massive funding round from a company called Paxos here in the United States, providing custody services and other infrastructure for cryptocurrency. In fact, they back actually Revolut, as well as PayPal and Venmo and Credit Suisse's cryptocurrency solutions. And that makes total sense as to why they raised $300 million, bringing their total funding to date to over $500 million and their current valuation to $2.4 billion, Kyle.
Another unicorn in the space. These guys, Paxos, focus on clearing and settlement for cryptocurrencies. A lot of that transactions, they were approved for a federally chartered bank to provide banking services, but they did specifically note that this $300 million fundraise really was not going towards opening and operating that bank. Really, it was just towards growth capital to handle the orders and the demand for their current custody and settlement platforms. This is fantastic stuff, shows the demand is growing like crazy for their traditional services. They also have this bank layer that they're going to throw over top. All of this is fantastic, and you just can't wait to see how they use this funds moving forward.
Absolutely. I think the founder had called it confidence capital, given the fact that now their many clients can have confidence that they're going to be here for many years to come.
And moving into #3, we've got INX. We've covered these guys many times on the show, and this is a cryptocurrency and security token marketplace and exchange. And they have officially closed their fundraise. They have raised $125 million, folks. We're talking about $85 million from that public sale. They did the fully registered tokenized IPO. And so they did that. They also had a $7.5 million private funding round as well. And then finally, the SPAC that we covered on the Canadian Stock Exchange, they raised another $32.5 from that. Brings it right around that $125 million mark to open not only a cryptocurrency exchange, but a security token marketplace for secondary trading of the shares that you own, and also to launch that broker-dealer to help businesses fundraise. It's just fantastic work from INX.
In fact, for those of you who've been following along, they might remember that INX already structured a deal with Open Finance Network, one of the current U.S. broker-dealers trading security tokens today. So now that the deal has officially closed, it looks like we can expect that one to go forward as well, which means soon INX will get their acquisition of OFN and we might see one full umbrella. Not to mention that INX's cryptocurrency platform should be opening up to the public later this month.
Very exciting stuff.
#4, Kyle, Binance. An interesting update there. We saw they made huge waves a couple of weeks ago when they announced tokenized stocks, enabling international investors to access through Binance tokenized stocks representing shares in Tesla, Microsoft, MicroStrategy, and many others through their platform. And And this is, of course, a big innovation for those who can't get access to these stocks very easily, but it did also raise the eyebrows of many regulators across the globe, including one specifically from German's regulators, BaFin is what they're called. And that's specifically interesting because the partnered company with Binance, as well as actually FTX and Bitrex, two other cryptocurrency exchanges offering the same thing, they partnered with a company in Germany called CM Equity to make all of this possible under the right infrastructure and licenses. Interestingly enough, though, Binance Germany, the subsidiary of Binance in Germany, presumably, has been called out by BaFin specifically for not having a prospectus for the various tokenized stocks. And this is a potential violation, of course, of securities laws, leading to potentially many, many different fines and the closure of this operation. But interestingly enough, this announcement didn't mention CM Equity at all, nor has this case been made against any of the other cryptocurrency exchanges trading using the CM Equity platform. So very interesting development.
It's very interesting. I think that certainly there could be a case here of Binance being the biggest name. So naturally, they when they entered into the space, they attracted the attention of regulators in a way that maybe some of these smaller ones didn't. But that being said, it's going to be fascinating to see. I think that the regulators are going to be interested in understanding how these mirrored shares work, how the structure works. To date, we still don't know how many shares CM Equity holds in these assets and how they're being traded, what Binance is doing and their role in this. So I'm certainly sure that the regulators are trying to audit this a little bit and understand exactly what's going on. But we'll just have to see. Only time will tell whether they can actually really impart themselves on this operation or if it's going to move, whether the regulators like it or not.
Definitely. We'll be sure to keep you updated on this one. And now for number 5, Fidelity, which has announced the Fidelity Agency Lending Service, which actually has been operating since 2019 internally, but now has officially been opened up for external managers to leverage. And this digital platform is actually enabling, it does not use blockchain per se, according to the announcement, but it is making it easier for clients to go ahead and get lending services against their securities. I have a quote here from Justin Aldridge, who's an SVP over at Fidelity Agency Lending, and he says, quote, "Current market dynamics, they're compelling institutions to take a more active role in their securities lending programs in order to find a competitive advantage. They believe that firms are looking for an agent lender with both new technology and the capability to serve large and complex institutions."
This is fascinating stuff. Fidelity is going to be upgrading a lot of their infrastructure. They're using automated lending, AI to leverage loan decision-making and pricing, as well as leveraging automated lending reconciliation to really upgrade the bond and loan process, which is naturally something that's always been a little bit antiquated and has needed a bit of a facelift. So this is fascinating stuff. However, we do have to say they're not using blockchain yet. These are not tokenized loans. These are not tokenized bonds or anything like that, unfortunately. But this is the first step in that direction. Being tech savvy, upgrading a lot of the infrastructure to improve clearing and settlement is needed in the market infrastructure today, and we just love to see it from Fidelity.
A bank like that can't just overnight switch to the blockchain. They've got an existing infrastructure to upgrade, and so like you said, it's step one, and I'm confident that down the line, tokenization and blockchain will be part of that platform too.
And with that, Herwig, I think it's time for you to lead us into the